Hello guys, welcome to Options Playbook. Today let's discuss a strategy for Asian Paints for February 2021. This is a low risk high probability trade. So let's start. As you can see, this is a 2-hour chart of Asian Paint for the last 3 months, and you can clearly see that Asian Paint is having resistance around 2800 levels, and it is having support somewhere around 2100 levels for the last 2 to 3 months. So based on this, we will try to build a strategy where if Asian Paint stays between this range, we will be in profit. Looking at the chart and looking at the tendency, Asian Paint is likely to go a little higher from here. So we will take a slight bullish view on Asian Paint with a resistance around 2800 or 2900 levels. So let's see how the strategy looks. So current Asian Paint spot price is at 2463, and based on this, what you need to do is you need to take a bull call spread, which is 2480 call buy and 2500 call sell one lot. Along with this, you also need to take a short strangle, which is 2100 put sell and 2900 call sell. This is based on the support and resistance for the last 3 months that what we saw in Asian Paint. When you take this trade, the break-even range will be around 832 points, which means Asian Paint can fluctuate plus 15% or minus 15%. Still, you will be in the profit zone. The max profit will be around 8,100 rupees, and the max risk is unlimited since we are taking a naked shot on put and call. The capital required is around 1.5 lakhs. Probability of profit is quite high, 94%. Return on investment is 1.5 to 6%. So on an investment of 1.6 lakh, if you are making 1.5 to 6% in a month, that's a pretty good trade. So now let's go to Opstra and see the open interest and also the strategy. Okay, now I'm in Opstra. I have selected open interest for Asian Paint February 2021. As you can see on the call side, the highest open interest is on 2800 and the second highest open interest is on 2600 levels. So on the upper side, we are trying to build a strategy where the break even is above 2800 to be safe. Similarly, on the downside, the highest open interest is at 2500 levels and the second highest open interest is at 2300 levels. So we will try to build a setup where on the downside, the break even is below 2300 so that we are safe. The range will be quite big, so the profit zone will also be big. So let's see the setup. I've already built it, and as you can see, I've taken a bull call spread by using 2480 call buy at 80.8 and 2500 call sell at 72. Along with this, I have taken a short strangle at the extreme ends, seeing the support and resistance. So 2100 put sell at 6.7 and 2900 call sell at 8.8. When you take this trade, you can see that the 832 point range is it's quite big. So even if Asian Paint goes up by 15% or drops by 15%, you will be in the profitable zone. As I told, Asian Paint is looking little bullish. Probability are it might start going up and trade between 2500 to 2600 levels. So within this range, you should be able to make around 8,000 rupees profit. How to handle this trade is when you start seeing 2 to 3% of profit within 1 or 2 weeks, you can exit this trade. The estimated margin is around 1.3 lakhs. Roughly, you can consider it as 1.5 lakh rupees. And the break even on the downside is 2094, which is quite good. And also on the upper side is 2926. So try out this trade, and we'll see how Asian Paints behave. So since we have a naked short put and call, you need to make adjustments if Asian Paint starts challenging on the upper side or on the downside. If you are an experienced trader, you can hold till expiry and you should know how to handle the short call or the short put. Let's quickly go through a few of the simple adjustments that one can make if Asian Paints becomes extra bullish or extra bearish. Okay, Let's say if Asian Paint becomes extra bullish or extra bearish, these are simple adjustments for the naked put or call that you have shorted. If the stock starts moving up, you need to roll up your short put. If the starts moving down, you need to roll down your short call. Until what level you will roll up your call or put is based on in which direction Asian Paint moves. If it starts challenging on the upper side, you should roll up your put, and you should roll up to the level where you have a short call and convert it into short straddle. The other thing is, if the stock starts moving down, you can roll down your call until the short put and convert your position into a short straddle. So these are some simple adjustments, but if you are an experienced trader, you can do advanced adjustments, like things like you can shift your trade to the next expiry, you can even split your trade, you can convert into iron fly, making it as a risk defined strategy. If it becomes extra bullish or bearish, you can just go long or short with futures. And you can, if things go out of control, you have to book loss so that you can save your capital. So these are few things which I can recommend. Take this trade and see how it goes. Thanks for watching. Subscribe to Options Playbook for low risk, high probability trades. Thank you.